Based on the historical data and forecast, Bitcoin exhibits a downtrend, particularly evident in the recent forecast prices. The price has consistently been below the Bollinger Band center, indicating bearish momentum. The RSI fluctuates between 37.2 and 51.4, suggesting periods of mild oversold and overbought conditions but not strongly indicative of a significant trend reversal. Given the support price of $105,500 and the forecast suggesting a continued decline, I recommend a short position. Entry price should be $109,500, placing a stop-loss order at $111,800 to protect against a potential rebound. The target price is set at $102,800, aligning with the forecast price for September 5, 2025. To refine this strategy, we can incorporate the Bollinger Bands. If the price breaks below the lower band, it strengthens the short signal. The RSI approaching 20 would also confirm an oversold condition, reinforcing the short position. Therefore, a combined strategy would involve entering a short position at $109,500, with a stop-loss at $111,600 and a target price of $104,000. This portfolio combines the trend analysis, RSI confirmation, and Bollinger Band signals for a high-probability, high-return investment strategy, capitalizing on the anticipated downtrend of Bitcoin. Based on the historical data and forecast, Ethereum shows a volatile trend with periods of consolidation and upward momentum. The recent price action, particularly the surge to $4,820, suggests potential for further upside. Considering the RSI values hovering around 50 to 70, the asset is neither severely oversold nor overbought, indicating a balanced market. The forecast for the next week projects a price range between $45.20 and $46.20, which aligns with the recent trend. I recommend a long position entry at $4,520, with a stop-loss set at $4,340 to mitigate potential downside risk. The initial target price is $4,620, aiming to capitalize on the forecasted upward movement. To refine the strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, and when it touches the upper band, it signals a potential overbought condition. Given the forecast and the current RSI, I will implement a strategy that combines RSI and Bollinger Bands. If the price falls below $4,520 and the lower Bollinger Band is below $4,340, I will hold the position. If the price rises above $4,620 and the upper Bollinger Band is above $4,870, I will take profit. This combined approach aims to maximize returns while minimizing risk, creating a robust and adaptable investment portfolio. Based on the historical data and forecast, XRP shows a slightly downward trend, with the forecast prices consistently around $2.85 to $2.92. The RSI fluctuates between 41.1 and 51.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been oscillating within a range, with the bottom band around $2.78 to $2.83 and the top band around $3.29 to $3.38. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. My recommended strategy is to initiate a long position when the RSI falls below 40, indicating an oversold condition, and the price touches the lower Bollinger Band. For example, if the RSI drops to 39.5 and the price reaches $2.82, enter a long position with an entry price of $2.82. Place a stop-loss order at $2.74, just below the support price, to limit potential losses. Set a target price at $3.03, the recent resistance level. If the RSI reaches 80 and the price touches the upper Bollinger Band, close the position. This strategy aims to profit from short-term bounces and reversals within the established range, with a focus on risk management through stop-loss orders. Based on the historical data and forecast, BNB shows a mixed trend with periods of consolidation and upward movement. The support price consistently remains at $855, while the resistance fluctuates around $876. The RSI values have fluctuated between 53 and 68, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands show periods of expansion and contraction, suggesting volatility and potential breakout opportunities. Considering these factors, I recommend a moderately bullish strategy focusing on short-term gains. My proposed strategy involves entering a long position at $873, coinciding with the start of the forecast period. A stop-loss order should be placed at $855, aligning with the established support level to limit potential losses. The initial target price is set at $898, based on the recent historical high. If the price reaches this target, consider taking partial profits and adjusting the stop-loss to the entry price to secure gains and protect against a potential reversal. This strategy combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a generally upward trend, particularly noticeable from August 23 onwards. The forecast for the next week predicts continued upward momentum, with prices reaching $221. The RSI consistently fluctuates but generally stays above 50, indicating a bullish sentiment. The Bollinger Bands show that the price has been trending towards the upper band, further confirming an upward trend. I recommend a long position strategy. Entry price will be $207, with a stop-loss set at $204, just below the support level, to mitigate potential losses. The initial target price will be $218, aligning with the forecast high for September 3, 2025. To refine this strategy, I will incorporate an RSI-based exit point. If the price reaches $218 and the RSI exceeds 80, consider taking profits to avoid being trapped in an overbought market. Conversely, if the price falls to $204, triggering the stop-loss, exit the position to prevent further losses. This combined approach, leveraging both price forecasts and RSI signals, aims to maximize returns while managing risk effectively. The final target price is $221, which will be achieved if the price continues to rise. Based on the historical data and forecast, Doge-Coin shows volatility within a defined range. The price has been fluctuating between a support of $0.209 and a resistance of $0.232. The RSI indicates periods of both oversold and overbought conditions, with recent values hovering around the mid-50s. Considering the Bollinger Bands, the price is currently near the middle band, suggesting a potential for sideways movement or a breakout. The forecast for the next week anticipates a range-bound movement, with prices fluctuating around $0.22. Therefore, a range-bound trading strategy is recommended, capitalizing on the volatility within the support and resistance levels. I propose a portfolio strategy combining RSI and Bollinger Band signals. We will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 40, indicating an oversold condition. Entry price will be $0.206. A stop-loss will be placed just below the support level at $0.20. The target price will be set at the resistance level of $0.232. Conversely, a short position will be opened when the price touches the upper Bollinger Band and the RSI exceeds 70, indicating an overbought condition. Entry price will be $0.251. A stop-loss will be placed just above the resistance level at $0.26. The target price will be set at the support level of $0.209. This combined strategy aims to capture profits from both upward and downward price movements within the established range, maximizing potential returns while managing risk. Based on the historical data and forecast, Tron shows a slightly downward trend, with the forecast prices consistently below the recent closing prices. The RSI indicates periods of both overbought and oversold conditions, with recent values fluctuating around 50, suggesting indecision. The Bollinger Bands show that the price has been oscillating within the bands, indicating moderate volatility. Considering these factors, I propose a cautious strategy focused on short-term trades capitalizing on price fluctuations within the Bollinger Bands. My strategy involves a combination of RSI and Bollinger Band signals. First, I will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 40. For example, if the price reaches $0.333 and the RSI is 45, I will enter a long position at $0.333. I will set a stop loss at $0.330 to limit potential losses. The target price will be the upper Bollinger Band, approximately $0.335. Conversely, I will initiate a short position when the price touches the upper Bollinger Band and the RSI exceeds 60. If the price reaches $0.341 and the RSI is 65, I will enter a short position at $0.341. I will set a stop loss at $0.344 and target $0.338. This combined approach aims to capture short-term gains while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, Cardano has shown a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuating around the 50 to 60 range suggests that the asset is neither significantly overbought nor oversold. The Bollinger Bands indicate periods of increased volatility, with the price occasionally touching the upper or lower bands. Considering the forecast for the next week, which predicts a range between $0.847 and $0.871, I recommend a moderately bullish strategy. I would enter a long position at $0.847, placing a stop-loss order at $0.826, just below the recent low, to mitigate potential losses. The target price will be set at $0.865, aligning with the forecast high and providing a reasonable profit margin. To refine this strategy, I'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, I would enter a long position at the prevailing price, with a stop loss at the recent low and a target price near the resistance level of $0.912. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, I would consider a short position with a stop loss above the recent high and a target near the support level of $0.741. However, given the current RSI and forecast, the initial long position at $0.847 with a stop loss at $0.826 and a target at $0.865 provides the most efficient approach, balancing risk and potential reward. Based on the historical data and forecast, Chainlink demonstrates a fluctuating trend with periods of consolidation and minor upward momentum. The RSI consistently fluctuates above 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods where the price touches the upper band, suggesting potential resistance, and the lower band, indicating potential support. Considering the forecast data, the price is expected to hover around $25 to $26 over the next week. Therefore, I propose a moderately bullish strategy focused on capitalizing on short-term upward movements while mitigating risk. My strategy involves entering a long position when the RSI dips below 60 and the price touches the lower Bollinger Band, signaling a potential oversold condition. For example, if the RSI falls to 55 and the price reaches $20.8, enter a long position at $21. Set a stop-loss order at $19.5, just below the lower Bollinger Band, to limit potential losses. The initial target price is $24, aligning with the previous resistance levels and the upper Bollinger Band. If the price continues to rise, consider adjusting the target price to $26. This strategy aims to capture short-term gains while protecting against significant downside risk. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a volatile trend with periods of consolidation and upward momentum. The RSI consistently fluctuates around the 50 to 70 range, indicating neither strong overbought nor oversold conditions for an extended period. The Bollinger Bands show a widening trend recently, suggesting increasing volatility and potential for price swings. Considering these factors, I recommend a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. Initially, we will implement a long position when the price approaches the support level of $3,990 and the RSI dips below 30. The entry price will be $3,990. A stop loss will be placed just below the support level at $3,600 to mitigate potential losses. The initial target price will be set at the resistance level of $5,140, aiming for a significant gain. As the price approaches the $5,140 resistance, we will adjust our strategy. If the RSI reaches 80, we will consider taking partial profits and setting a stop loss slightly below the recent high to protect gains. The forecast data indicates a price range between $4,860 and $4,980 for the next week. Therefore, if the price retreats and the RSI falls below 40, we will re-enter a long position at $4,860 with a stop loss at $4,500, targeting the previous resistance level of $5,140. This adaptive approach combines the strengths of each indicator, capitalizing on both upward trends and potential reversals while managing risk effectively. Based on the historical data and forecast, Quant shows a downtrend. The price has been consistently approaching the support level of $101, and the forecast for the next week indicates further decline. The RSI consistently hovers around the mid-range, occasionally dipping below 40, suggesting weak selling pressure. The Bollinger Bands show the price nearing the lower band, reinforcing the potential for a downward move. Therefore, I recommend a short position. Entry price should be $102, with a stop loss placed at $104 to protect against unexpected upward movements. The target price for this short position should be $99, aiming to capitalize on the predicted downtrend. To refine the strategy, we will integrate the RSI and Bollinger Band signals. When the RSI falls below 37, it indicates an oversold condition, and the price is near the lower Bollinger Band. This confluence strengthens the short signal. We can enter a short position at $102, with a stop loss at $104. The initial target price is $100, coinciding with the forecast price. If the price continues to decline, we can adjust the target price to $99, aligning with the lowest forecast price. This combined strategy leverages technical indicators to enhance risk management and maximize potential returns. Based on the historical data and forecast, shows a slight upward trend with periods of volatility. The RSI consistently fluctuates around the midpoint, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential price movement. Considering the forecast for the next week, which predicts a gradual increase, I recommend a moderately bullish strategy. Specifically, I suggest entering a long position at $3.63, placing a stop loss at $3.43, which aligns with the support level, and setting a target price of $3.76, based on the forecast high. This strategy aims to capitalize on the predicted upward trend while mitigating risk by utilizing the support level as a safety net. To refine this strategy, I will incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, a long position should be entered at the prevailing price with a stop loss at $3.43 and a target price of $3.7. Conversely, if the RSI rises above 80, indicating an overbought condition, a short position should be considered with a stop loss at $3.7 and a target price of $3.5. The final portfolio will be a blend of these strategies, with a primary focus on the initial long position at $3.63, adjusting based on RSI signals to optimize returns and manage risk effectively. Based on the historical data and forecast, Tron shows a slightly downward trend, with the forecast prices consistently below the recent closing prices. The RSI indicates periods of both overbought and oversold conditions, with recent values fluctuating around 50, suggesting indecision. The Bollinger Bands show that the price has been oscillating within the bands, indicating moderate volatility. Considering these factors, I propose a cautious strategy focused on short-term trades capitalizing on price fluctuations within the Bollinger Bands. My strategy involves a combination of RSI and Bollinger Band signals. First, I will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 40. For example, if the price reaches $0.333 and the RSI is 45, I will enter a long position at $0.333. I will set a stop loss at $0.330 to limit potential losses. The target price will be the upper Bollinger Band, approximately $0.335. Conversely, I will initiate a short position when the price touches the upper Bollinger Band and the RSI exceeds 60. If the price reaches $0.341 and the RSI is 65, I will enter a short position at $0.341. I will set a stop loss at $0.344 and target $0.338. This combined approach aims to capture short-term gains while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, BNB shows a mixed trend with periods of consolidation and upward movement. The support price consistently remains at $855, while the resistance fluctuates around $876. The RSI values have fluctuated between 53 and 68, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands show periods of expansion and contraction, suggesting volatility and potential breakout opportunities. Considering these factors, I recommend a moderately bullish strategy focusing on short-term gains. My proposed strategy involves entering a long position at $873, coinciding with the start of the forecast period. A stop-loss order should be placed at $855, aligning with the established support level to limit potential losses. The initial target price is set at $898, based on the recent historical high. If the price reaches this target, consider taking partial profits and adjusting the stop-loss to the entry price to secure gains and protect against a potential reversal. This strategy combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SUN token shows a sideways trend with slight volatility. The RSI fluctuates between 48.9 and 69.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been relatively stable, with the price occasionally touching the upper and lower bands. Considering these factors, I recommend a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. We will implement a swing trading strategy, focusing on short-term price movements within the established range. The strategy involves entering long positions when the RSI dips below 30 near the support price of $0.0226. For example, if the RSI reaches 25 and the price is at $0.0226, enter a long position with an entry price of $0.0226. Place a stop-loss order at $0.022 to limit potential losses. Set a target price of $0.024, aligning with the resistance level. Conversely, enter short positions when the RSI exceeds 75 near the resistance price of $0.0248. For instance, if the RSI reaches 78 and the price is at $0.0248, enter a short position with an entry price of $0.0248. Place a stop-loss order at $0.025 and set a target price of $0.023. This combined approach aims to capitalize on short-term fluctuations while managing risk effectively. Based on the historical data and forecast, AVE shows a mixed trend with periods of both upward and downward movement. The RSI fluctuating around 50, and occasionally reaching overbought levels, suggests a market that is neither strongly bullish nor bearish. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, I propose a moderately bullish strategy with a focus on short-term gains. The support price of $307 and the resistance price of $331 will serve as key reference points. My strategy involves entering a long position at $320, capitalizing on the recent upward momentum and the forecast prices hovering around $327. To mitigate risk, I recommend setting a stop-loss at $312, just below the recent low and the lower Bollinger Band. The target price will be $325, aligning with the forecast and providing a reasonable profit margin. This strategy combines RSI and Bollinger Bands to identify potential entry and exit points, aiming for a balance between risk and reward. The portfolio will be 60% long AVE, 30% cash, and 10% in stablecoins for flexibility. This allocation allows for quick adjustments based on market changes and potential opportunities. Based on the historical data and forecast, BONK demonstrates a slightly downward trend with considerable volatility. The RSI consistently fluctuates around 40, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been oscillating within a range, suggesting sideways movement. Given the forecast for the next week predicts a continued decline, I recommend a short selling strategy. We will enter a short position when the RSI reaches above 60, which is not the case in the historical data. However, we can utilize the Bollinger Bands for a more precise entry. Let's enter a short position at $0.00000212. The stop loss will be set slightly above the upper Bollinger Band at $0.000273 to protect against unexpected upward spikes. The target price will be $0.000205, aligning with the lower end of the forecast range and providing a reasonable profit margin. To refine this strategy, we'll incorporate a dynamic stop loss based on the lower Bollinger Band. This means that as the price falls, our stop loss will also adjust downwards, locking in profits and minimizing potential losses. If the price reaches $0.000205, we will close the position. However, if the price retraces and touches the lower Bollinger Band, we will move the stop loss to that level. This strategy combines the predictive power of the Bollinger Bands with the risk management of a dynamic stop loss, optimizing for both potential returns and capital preservation. This approach should yield a high return with minimal risk. Based on the historical data and forecast, BTC exhibits a generally upward trend, although with periods of volatility. The RSI fluctuates around the middle level, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands show periods where the price touches the lower band, suggesting potential oversold opportunities. Considering the forecast data, the price is expected to increase to $7.81, and the support price is $7.06. The RSI is currently below 80, and the Bollinger Bands are widening, suggesting increased volatility and potential for price swings. Therefore, I recommend a long position strategy focusing on capitalizing on short-term dips and the overall upward trend. The strategy involves entering a long position when the RSI falls below 20, which hasn't happened recently but is a potential future entry point. A more immediate strategy is to enter a long position at $7.06, coinciding with the support price and a potential bounce-back opportunity. Set a stop-loss order at $6.91, just below the recent low, to limit potential losses. The initial target price is $7.56, the recent resistance level. If the price breaks through $7.56 and continues to rise, adjust the target price to $7.81, aligning with the forecast. This strategy combines support and resistance levels with RSI and Bollinger Band signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PAX Gold shows a clear uptrend. The RSI has been trending upwards, moving from 43.4 to 70.8, indicating increasing bullish momentum. The forecast prices predict continued upward movement, reaching $3,610. Considering the RSI is currently at 70.8, which is overbought, a short-term pullback is possible, but the overall trend remains bullish. Therefore, I recommend a long position with an entry price of $3,460. To manage risk, set a stop loss at $3,420, just below the lower Bollinger Band. For the target price, I aim for $3,570, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, I'll incorporate a layered approach based on the RSI and Bollinger Bands. Initially, enter a long position at $3,460 with a stop loss at $3,420. If the price reaches $3,500, add another long position at $3,500 with the same stop loss. As a final layer, if the price hits $3,530, enter a third long position at $3,530, maintaining the $3,420 stop loss. The target price for all positions will be $3,570. This layered approach allows us to capitalize on the uptrend while mitigating risk through a consistent stop loss. Based on the historical data and forecast, Maple Finance shows a slight upward trend with periods of consolidation. The RSI fluctuates between 37.8 and 53.0, indicating neither strong overbought nor oversold conditions consistently. However, the recent forecast prices suggest a continued upward momentum, potentially reaching $0.469. Given the support price of $0.424 and resistance of $0.494, a breakout above the resistance could signal a further rally. I recommend a long position strategy focusing on the upward trend. The entry price should be $0.452, coinciding with the latest forecast price and the recent upward movement. A stop-loss order should be placed just below the support level at $0.424, providing a buffer against potential pullbacks. The initial target price should be the resistance level at $0.494, aiming for a quick profit. If the price breaks above the resistance, a trailing stop-loss can be implemented to capture further gains, with a revised target price of $0.50. This strategy combines trend following with risk management, maximizing potential returns while minimizing losses.